Hi, my name's Simon Thorpe. I'm a research scientist with the CNRS in Toulouse. Normally I work on sort of cognitive neuroscience, but I actually have been interested in the last couple of years in problems of taxation and trying to come up with a fair tax system. And today I want to tell you about my proposition for a 0000.x plan. It's a bit like Herman Cain's 999 plan. Herman Cain was a Republican candidate who got thrown out a few months ago. But he was proposing a simple reform of the tax system with 9% business tax, 9% income tax, and 9% sales tax. Sounded like a good improvement for a lot of people, but actually that particular system is not very good because 84% of people would be worse off, and guess what? It's the rich people who would benefit most. My own version is even more radical. We would have 0% income tax, 0% taxes on profits, sort of corporation tax, for instance, and a 0% sales tax, VAT, in Europe. Now, all of this would be replaced by a single flat rate financial transaction tax of something well under 1%, I think, with a variable rate to match government revenue to income. I should point out that while I've called it the 000 plan, you could also get rid of other government revenue schemes like health and unemployment contributions as well, but I'd already got enough zeros, I think, in my plan as it is. I should also point out that while my proposition is to replace most taxes with this single financial transaction tax, you can leave in other taxes that have some social function, such as taxes on tobacco, alcohol, petrol, and so on. So it's not necessarily getting rid of taxes which are useful. So to start off with, let's have a few think about the question of what would be an ideal tax system if you wanted to produce something that was really good. I think the first point is it has to be fair. Currently, tax systems that we have are really not fair at all. For instance, in France, everybody knows that 50% of the population don't actually pay income tax at all. And of course, if it was the 50% of the population who had the lowest incomes, well, that wouldn't be a serious problem. But in fact, basically the people who pay no tax are often very wealthy people who have just found loopholes which allow them to avoid paying taxes. Multinationals often avoid paying taxes. So, for instance, Google makes billions of profits in Europe and only pays about 2 to 3% tax on its profits. Barclays Bank a couple of years ago made £11 billion profit. They only paid 1% corporation tax on that. And in general, actually, the financial sector pays remarkably little tax, whereas normal people in France pay 19.6% VAT on just many of the things they buy. Things you buy in the financial sector basically go untaxed, and that's not fair. You want a system which is painless. The current system, based on tax returns and so on, is very unpleasant to use. People hate filling in tax returns. And the tax system in the US requires that companies fill in 11 tax returns every year. Obviously, people will hate taxes done like this. You want a system which is difficult to cheat. Current tax systems are notoriously easy to avoid paying taxes if you're wealthy or if you're a multinational. There's a whole industry based on tax evasion and optimization, which currently means, and that's why the system is unfair. And you want a system which is cheap to implement. Collecting taxes is expensive. It requires a lot of government workers to be checking up on tax returns, and also it involves a lot of unuseful activity from in the accounting departments of companies and things like this, just to fill in tax returns. So those are four features that you would actually like to have in an ideal tax system. I would like to argue that a financial transaction tax could well be an option because it has these four features which are very, very attractive. I'm not the first to propose a financial transaction tax. There are lots of people who are proposing them. So Nicolas Sarkozy, the currently candidate for a French presidential election again, has been proposing a 0.1% tax on share trading. He reckons that this will produce about €1 billion a year. Actually, that's an incredibly low number given the total amount of financial transactions going on in France, as we'll see later on. The European Commission is also proposing a 0.1% share on share and bond trading and a 0.01% tax on derivatives. They reckon about 57 billion a year would be generated by such a tax. Actually, there again, the numbers I think are woefully underestimated, as we'll see later. The Robin Hood tax movement is well known for proposing a 0.05% tax on financial transactions, and they reckon that will generate about $400 billion a year. And other groups like the Europeans for Financial Reform, they're also proposing a 0.05% transaction tax. That would also be very useful for slowing down excessive speculation and so on. The problem is that the lobbying power of the financial sector can be so powerful that they can prevent implementation of these sort of taxes, and they're currently very successful. And I think the problem is that the financial transaction taxes are seen as a punishment. They're a way of getting at the financial sector, whereas in fact there's a way of presenting the case for financial transaction tax in a different light, which involves combining the introduction of these financial transaction taxes with the abolition of other taxes. This is an idea that I actually put in an article that I published in October 2010, where I worked out that you would actually need only a small tax to be able to replace all taxes. At the time, I wasn't really sure how original this idea was. It turns out that I'd already read a paper by a Brazilian economist, Marcos Sintra, who'd published an original paper in 2003 that got translated into English in 2009, and I'd already read that paper when I wrote my own stuff. In fact, in Brazil, they actually had a financial transaction tax for some years that got abolished, apparently because the business sector found that it was too difficult to avoid, which I think makes the point. Has Marcos Sintra's argument been followed up? Well, the fact is that if you look in the bibliographic databases like Scopus, the Web of Science, or Google Scholar, you can find that he's never been cited, except for once, actually. In Google Scholar, you'll find one citation of his English translation paper in 2009, and that was in my paper. So, it really has gone nowhere in the economics world. But a few months after publishing my paper, I discovered that actually there was somebody who had been proposing the very same idea of replacing taxes with a financial transaction tax. His name's Edgar Fieger. He's an economist from the University of Wisconsin. He's actually retired now, who back in 2000 proposed his idea for an automated payment transaction tax, an APT tax, with exactly the same idea of replacing taxes with a single automated tax. Now, great idea, but it's been cited 3 times in the Scopus database and 2 times in the Institute for Scientific Information database. It's just gone nowhere, and nobody's been interested in this, which is really tragic. Interestingly, there's a recent attempt at legislation in the US. There's a Congressman Chaka Fattah from Pennsylvania has twice proposed a Debt-Free America Act. The current version, HR 1125, is proposing a 1% tax on all transactions, with the exception of transfers between a taxpayer's accounts or deposits in a personal account. And his idea is actually to phase out income tax over about 10 years with tax rebates in the intervening period. Actually, I think it sounds very good. Unfortunately, it's going nowhere. Nobody seems to be interested in it, and he has no support, so that's a real shame. So people in the States, you should back this guy. I think he's got a very sensible idea on that he's proposing. There are a few places where you see some support for these sort of ideas. One is the APT tax site, which is based on Edgar Fieger's APT tax idea. There's some activity there. And just recently, there's a new site called the Transaction Tax site, which was set up by a guy called Andrew Van Hook in the States. It's actually very nicely done. I'm very jealous of his ability to do really nice websites. There's a bit on it where he says their aim is to reach 1 million likes on Facebook. Currently, there are 58 people, one of whom is me, who actually like the idea. So there's some way to go, I think, before the transaction tax website really gets going. But good luck to them. My own work has involved setting up a blog back in October 2010, and you can find that if you're interested. There are lots and lots of posts on it, and we've got over 9,000 visits now. Lots of posts, lots of stuff in there. Many people say it's too complicated, can't be bothered to read it, but there's a lot of detailed argumentation in there. I'm trying to summarize the key points in this talk right now. There's actually two big arguments that I've been putting forward. One is to the idea of replacing taxes by a variable rate FTT, which is what I'm talking about here. The other is the idea of transferring money creation from commercial banks to central banks. That's another big story. We'll need another talk.